Recently, I turned a couple $1,000s into over $1 million with a single trade. Last cycle, I was able to turn $760 into over $150,000. I was also able to turn $3,000 into over $600,000. And overall in crypto, I've made vastly more money than I've ended up losing, going from literally unemployment in 2020 to a millionaire by 2021. This video is about how I find these killer crypto projects early. I'm gonna go through my exact formula and all the different details that I look through when it comes to filtering out the bad projects and finding the hidden gems. Now, the bad news is what I'm about to teach you is by no means easy. Just like really anything in life, winning in crypto requires a lot of hard work. But the good news is I'm gonna lay out the exact framework that I use. This is something that took me literally years worth of learning to learn, and a lot of hard learned lessons that I learned the wrong way that hopefully you don't have to. Okay, so I'm gonna break down the formula that I use to find crypto projects early into 3 different parts. The first part I'm gonna dive into is actually the easiest part, and that's how I find new ideas to research in the first place. The second part is how I filter out all the bad ideas. The vast majority of projects you're gonna come across in the crypto space are going to be bad ideas, so you increase your chances of finding good projects and good ideas by filtering out the vast majority of bad ones. The last part is identifying the good projects that are worth investing into. By the way, nothing I say in this video is investment advice. This is just me sharing lessons that I've learned and my own thoughts about how to trade and invest in the crypto markets. Okay, part 1, again, the easiest part. To find new crypto projects, there's a couple places that I go and look. And again, this is actually the least important part of my process. There are an abundance of places you can go to find new crypto projects. That's not really a hard thing to do within the crypto space. When it comes to me personally, I look in a couple different places. I might go check, for one, the YouTube comments of my videos. So I'll go into the YouTube comments of my videos and see what projects people are talking about. By the way, if you ever see somebody in the comments of my videos talking about like an Amazon crypto project that's like A7 something, that's always a scam. Don't ever click that or try to look that up. Or if you see like an annoying amount of posts about like a weird obscure crypto project that I'm not referencing or talking about in the video and I've never talked about, that is typically a scam as well, and something you should avoid. I might check replies from Twitter. I might see a text from a friend. Sometimes I find new cryptos in different research I read. So I read a lot of research each week, and sometimes they'll mention a crypto maybe I've never heard of. I'll find new projects in Twitter posts, podcasts I listen to, and sometimes it'll even come up in different conversations that I'm having with somebody. Before I'm recording a podcast, maybe I'm talking to a guest and they'll mention a crypto project, or I'll be at a conference and they'll talk about a project that they're really bullish on. There's an overwhelming abundance of people that are willing to show you their favorite project that they're heavily invested into within the crypto space. If I had to rate maybe my highest quality sources of information, like where I consistently find the best crypto projects, I'd probably say podcasts, reading research, and Twitter posts are the best places to find crypto projects during the bear market or during like a slow part of the season when people aren't maybe paying attention to the market as much. And during a bull run or like a mania phase where like everyone's investing in crypto, the alpha typically comes from comments or like word of mouth. Going through my original examples of like those really big wins that I talked about early in the video. The first one I found from a Twitter post. The second one I found via some research that I pay for. And the third one I found from a YouTube comment. Okay, so once you've found a project that you're interested in, you move on to stage 2, and that's filtering out the bad projects or the bad ideas. And this is where, again, 99% of these things go to die. Like 99% of the ideas or projects that you find should not pass this stage 2. And that's because the vast majority of crypto projects that you're going to end up coming across are going to end up being hot garbage. So this is a very useful step in your process. The first thing you need to look at is really, really basic, yet for some reason, 9 out of 10 people who invest in crypto, especially during a bull market, still don't do this. And that's looking at the market cap. Obviously, if you're a somewhat skilled crypto investor, this seems stupid to you because it just seems so obvious. I promise there's a lot more to it than this, and I go way more in depth later in the video, but this is a really basic thing that the vast majority of people still don't understand. The price of a crypto doesn't determine its size or how big it can grow. It is a meaningless metric when it comes to assessing a project. For example, a crypto sitting at 1 cent could be at $100 billion market cap and one of the largest crypto projects in the entire space. So the price of a crypto doesn't show you how cheap it is or how big or small it is. That's what the market cap is for. The market cap shows you how big or small a crypto is. Under $1 million in market cap means it's tiny. Under 10 million means it's really small. Under 50 million means it's small. Under 100 million means it's kind of small to medium. Under 500 million, I'd consider medium size. 1 billion and under is medium to large. 5 billion or under is large, and 10 billion or higher is very large. Tiny projects can multiply your money by an insane amount, but also are insanely risky. Large projects typically won't turn $1,000 into $1 million, but that's okay because they typically carry far less risk. So if you're looking for a really early, absolute gem of a crypto project, you want to find a project when it's small, really small, or tiny. You can definitely find some insane plays that are already bigger. It's just much more difficult to multiply your money by, say, 100x when a crypto project is already really large. The second thing you want to look at after market cap is FDV, or fully diluted value. This is really similar to market cap. In some senses, you could say it's like the true market cap of a project. FDV shows you how big a project would be if all its tokens were in circulation today. Often projects will lock up tokens for early investors, the team, incentives, various funds to grow the project, and more. These locked tokens aren't reflected in the market cap, but only the fully diluted value. I know that's kind of confusing, but think of it like this. Imagine if you had a special, really, really rare Pokemon card that there was only 10 of in existence, and each of these Pokemon cards was worth $1 million. So there's 10 of them. Each of them's only worth $1 million because they're so rare. Now imagine the Pokemon company was going through one of their old warehouses and they discovered 1 million more of these cards that were never released. So they decided to release 1 million more of these copies onto the open market. What do you think would happen to the price of those 10 cards that were out before? It would almost certainly epically crash the price of that card because now there's 1 million more of these things in circulation. Anyone that wants one can go get their hands on them and they're not quite as rare. This is similar to fully diluted value. It shows you all the tokens that maybe aren't on the market today, but one day will be on the market. So projects with high fully diluted value, FDV, compared to their market cap, could be ticking time bombs that you want to avoid. However, as with all things, there are exceptions. Let's take, for example, a project I really like called ResearchCoin. ResearchCoin has a high FDV compared to its market cap. That's because there's a lot of tokens that aren't released on the open market today that one day in the future will be released onto the market. However, the vast majority of those tokens are going to be slowly dripped onto the market as incentives over the next 12 years. 12 years is a long time in crypto, and it's hardly something I need to worry about if I'm just investing for this cycle. For tokens that have high FDV, it's really useful to use tools like token unlocks to see how the supply is allocated and when it's unlocking. After fully diluted value, I always check the website. Typically, a project's website is a really great indicator into the quality of that project. Keep in mind this isn't always accurate and there are exceptions, but for the most part, if a website is low quality and garbage, you can assume that the project likely is as well. Again, 100% there are exceptions to this. I've had really great projects that have started out with horrible websites. I wouldn't fully rely on this indicator. I would just use it as one piece of the puzzle when overall assessing a project. Typically, when looking at a website, I look for a clean, high quality design, good marketing and the ability to communicate, some sort of interesting concept or something that taps into a narrative I expect to be big. This is kind of a vague one, and it comes from the experience of looking over lots and lots of crypto websites. You start to notice the ones that are low quality that are typically associated with low quality projects. After checking out the website, I typically take a look at the chart. Is the price in an uptrend, a downtrend, or going sideways? And specifically when it comes to ruling out bad projects, I'm looking to see if this project's in a long-term downtrend. There's a phrase in investing that goes, don't try to catch a falling knife. And what that means basically is just don't jump into an investment that's in a long-term downtrend. From personal experience, I've got burned bad almost every single time I've decided to jump into a project that was in a long-term downtrend. 99% of the time, it literally doesn't work out. Along these same lines, I'll check if a project recently pumped. For example, looking at the chart, did it have a massive move up really recently? This is typically a sign of either a newsletter, an influencer on Twitter or YouTube or TikTok, etc., talking about this project and a lot of people jumping in all at once. And it's almost always followed by some sort of extreme pullback. I personally just avoid buying after a major pump until price is stabilized. After this, I'll typically check the project's volume. If a project has a really low volume, that's sometimes a worrying sign. And if you want to know what's low or high, it really depends on a project size. It also depends on the overall market, right? Like if it's a really bullish market environment and a project has a really low volume, that shows it has really low momentum. But if it's a really slow market environment, it's like really bearish and it has low volume, then that's not as much of an indicator. It's typically useful to like pick some projects that are maybe similar, maybe on the same chain, similar size, similar kind of feel, and see what their volumes are and compare those two. If it averages out and it's about the same as everyone else that's in its same category, then it's fine. But if it's radically different for some reason, that could either be really bullish or really bearish, or maybe just a sign that something else is going on. And the final two things that I always ask myself when it comes to filtering out the bad projects is, first off, do I genuinely understand the value proposition of this project? For example, how it works, how I think it can grow over time, what are the catalysts for that growth? As well as I always ask myself, how might this project fail? If I can't answer why I think this project might go up, or if I don't have like a basic understanding of this project, I typically go back and do more research on it so I do do have an understanding of that and a concept or a bull case for this project on why I think it could go up. The quickest way to lose money in crypto is by throwing your capital at cool sounding ideas that you really don't understand. In a similar fashion, understanding how projects might fail opens your eyes to certain weaknesses about a project that maybe you wouldn't notice at first glance. And this brings us to stage 3 in my process. Up until this point, I've shown you how I find projects and how I filter out the bad ones. Now I'm going to show you how I find the genuinely good ones. And I'll get to that in just a second, but really quick. The Obsidian Council is my private research community where I share monthly research, my entire portfolio updated monthly with the exact allocation I bought and a ton more. We've had projects like Pindle, which is up over 1,500%. Projects like Solana, which is up over 779%. Projects like Akash, which is up over 1,700%. And recently I got really lucky with Goon and it went up over 179,000%. That definitely is not typically normal, and that's definitely an outlier example. We also have the Airdrop guide, with some members made over $26,000 last year from airdrops alone, covering their entire membership for literally decades. I personally made well over 100K between this year and last, and I share everything I'm personally doing with airdrops with the community via the monthly Airdrop guide. The Obsidian Council is currently closed, but if you want to join the waitlist, there's a link in the description of this video. To identify the higher potential projects, I do a couple different things. First off, I assess the growth potential of the project. For example, does this project have a 2x potential? Could it double in value? Could it 5x in value? Could it 10x? 50x, 100x, 1000x or more? If I'm looking to turn $1,000 into like a small fortune, I gotta look at projects that have a high growth potential. Typically, to find a project's growth potential, I'll compare the project to the closest thing I can find that's a blue chip crypto asset. For example, with something like Cal Protocol, I'd compare it to something like Uniswap's all-time high. Cal Protocol today is sitting at around $58 million in market cap. Uniswap reached an all-time high of $22 billion during last bull run. That's a potential 379x if Cal were to reach the all-time high that Uniswap hit during last cycle. And this is just in general a really rough ballpark way to assess potential growth. By no means does the fact that Uniswap hit $20 billion last cycle mean that Cal can do the same thing. It's just in general, okay, this similar type of asset hit this high, so that means this also similar type of asset could potentially hit a similar level. By the way, if I'm talking about a token or if I mention it, assume that I own it. In general, I talk about tokens and projects that I'm familiar with, that I already own and hold because I'm bullish about them and excited about those ideas. After assessing a project's growth potential, I typically look at catalysts for growth. What would cause this project to go up in the future? That's a question you should probably ask yourself if you're investing into something. For example, when it comes to Polygon, the catalysts are the Pol token launch, the AG layer being fully deployed, and Polygon POS becoming an L2. Pol token is because the Matic token, which is Polygon's current token, is going to change, the ticker is going to change into the Pol token. Comes with a lot more than that. It's not just a ticker update. There's a lot of new utility that gets added to the token as well. But the reason I'm bullish on that, or I think that's a catalyst, is because I know people are really bullish on new tokens. They like the shiny new thing. The reason the AG layer excites me is because when people can experience how easy it is to move between these chains using the AG layer, I think they're going to be really excited and bullish on Polygon as a whole. And the reason the Polygon POS chain becoming L2 is a catalyst is because it means all the Ethereum influencers are going to suddenly start talking about Polygon because it's going to be one of the largest L2s in the space. Every project you invest in should have something clear you can point to as a catalyst for growth in the future. Next, after that, I'll take a look at liquidity. A project having low liquidity tells you two things. First off, it could be a red flag, meaning that the project maybe isn't a good project to invest into, but not always. The second thing it shows you is how volatile that project could be in the future. A project with low liquidity is really easy to move up and down in price. It only takes a small amount of buys to skyrocket the price and a small amount of sells to crash the price. This means if you find a project that you're really excited about, you think it's going to do really well because of some coming like narrative shift or catalyst, etc., and the liquidity is low, well, it can skyrocket in price really, really quickly, really easily. But again, on the inverse, it also means that even a small amount of sells can crash that price really rapidly. And that's one way I use it. Another way I use it is maybe I'll see a chart where like the price went way up and then it just cratered. And if I see that project has low liquidity, it doesn't bother me as much because I know it cratered due to the low liquidity and it could just as easily go back up, versus a project that has really thick liquidity that skyrocketed and then cratered is going to have a lot harder time recovering from that. Research Coin is another great example of this. If you look at the chart, it's been cratering in price. However, if you look at the liquidity, you can see the liquidity is only $500,000. That's really small in comparison to the total market cap of the project. The reason this doesn't bother me is because one of the co-founders of Research Coin is the founder of Coinbase, Brian Armstrong. So I'm assuming that if the project gains enough traction, he definitely has the connections and the means to deploy more liquidity to this project. The next thing I typically ask myself is this project a new token or an old token? As a rule of thumb, new tokens in crypto typically do better than old tokens. Obviously, the exception being VC tokens. There's a lot of crypto tokens that will launch at like $1 billion in market cap. So like they'll airdrop their tokens to their holders at $1 billion in market cap with a ton of unlocks on the horizon because they have a lot of investors, they have a lot of team unlocks, and just in general, a lot of dilution that's going to happen. Those types of new tokens I'd actually say are bearish because all the unlocks and sell pressure that are going to come within 12 to 24 months for that project. But outside of that situation, as a whole, new tokens that are well distributed are more bullish than old tokens that have been around for a little bit. And it shouldn't be like that, in my opinion. You should look at solid fundamentals like revenue, etc. That's how the market should assess these things. But for whatever reason in crypto, people get more excited about new tokens versus old tokens. After that, I ask myself what narrative this project might tap into and if I'm really excited or bullish on that narrative. For example, something like Akash taps into the AI narrative. I personally expect that when retail shows up into the crypto space, that the AI narrative will be huge. We've had Nvidia skyrocketing in price. People are really excited about AI. They've never had a chance to invest early stage into any AI project in their life. They only get something like Nvidia, which is a multi-trillion-dollar company already. So when they find really small crypto projects that are AI related or AI adjacent that they don't understand, they're going to say, wow, this is my chance to get exposure to this really big boom that is AI, and they're going to invest into it. That's my thesis when it comes to AI. If something doesn't tap into a really popular narrative, that's okay. Like, it's not the end of the world, but it always helps if it does. I also typically assess if the tech behind a project is actually valuable or is it vaporware? And there's a lot of crypto projects within the crypto space where the tech really is vaporware. It contributes nothing meaningful to the space, and they're really trying to sell you off of marketing buzz and ideas. Good tech is always a strong indicator of real growth, despite which narratives are popular, etc. After that, I'll typically check the Twitter and Discord announcements. First off, just to make sure the team is still active and building. You'd be surprised at how many projects you come across that maybe are exciting to you, but like the team gave up on the project like 6 months ago. And secondly, just to see what's in the pipeline, like what's coming up, what's this project releasing? Is there any bullish catalysts ahead that I need to know about? How active is the project in, as far as building? Do they release something every 2 years? Maybe that's less bullish. Are they releasing these huge milestone updates because they're just grinding and working really hard every couple months? Maybe that's more bullish. Finally, I'll ask myself if this is the type of project that I think influencers will share when the bull run hits its full stride. During a crypto bull run, everyone and their mom is sharing what projects they're investing into and what they're excited about. Essentially, everyone on the planet that's investing in crypto becomes an influencer. This is the stage of the market where, again, your taxi driver is giving you crypto picks. And there's always a certain type of crypto narrative that ends up spreading and being more viral than other types of crypto narratives. For example, a lot of people in crypto are excited about data availability. I think it's really unlikely that the average person is going to be excited about and talking about data availability to their friends. But I gave an example earlier of Research Coin. Research Coin, I think, is a really easy narrative to peddle. I think a lot of people are going to say, hey, I have this crypto, it's really small. Brian Armstrong, the guy that founded Coinbase, is the co-founder of it, and therefore I think it will go up. Those are easy narratives the average person can explain, share, and can go viral. Look for stories and ideas that are simple and can organically go viral. And that's it. Just another reminder, if you're interested in joining the OC, make sure you click the link in the description below this video, as well as if you're interested in joining my free newsletter, there's a link in the description of this video as well. As always, nothing that I shared here was investment advice. It's definitely my investment knowledge, just like things that I've learned along the way, my ideas, my thoughts, etc. But it is an individual advice toward you. I don't know you. I don't know your investment setup. And you always should do your own research and take everything I'm saying with a grain of salt. And you got to be a grown up. You got to be an adult and make your own investment decisions for yourself. If this video is helpful, make sure to hit the like button. If you have any questions or comments or anything you want to add, let me know in the comments below. As well as if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a video. Thanks for watching, and I'll see you next week.